So that would be an important point to raise. If it's material that's not being produced as a handout, that particular piece, if it's just living on a website, may not need to have its own disclosures. However, if its first use is a handout, those materials need to exist on their own and stand on their own. So we would provide disclosure for those materials. The next couple of points: is it costly to produce? Should we pre-file with FINRA? And is the material a new concept or approach? These can be all tied together, because we may ask you questions of, if you're producing a new brochure, you're launching a new fund, and it's costly to produce, we may say, hey, we should pre-file this with FINRA so you're not expending a lot of money on a marketing campaign where we may raise comment from FINRA through filing. We don't do that a whole lot, but we don't want you to have to sticker a nice glossy brochure if we can prevent it through either an expedited filing or a regular filing to ensure that the letter comes back clean. And also, we may ask to pre-file something if it's a new concept or approach. There's a lot of alternative funds and new funds that are out there that FINRA looks at in a different way rather than just a large cap fund. So if it's material that we haven't seen before across our 18 broker-dealers, we may say, you know, we haven't seen it, we're not sure if FINRA's seen it, we may want to flight it through FINRA to ensure that the material can be made compliant with the regulator. So those are all things that are important questions that we would ask you. Another thing is there a filing requirement? As earlier I mentioned about the audience, required FINRA filings are for retail materials, and we'll only file material with FINRA if it is being used with the general public, meaning is it going on a public website? Is your fact sheet being used with by brokers with their clients? If it's only being utilized in the institutional or financial intermediary space, those materials might not need to be filed with FINRA. So it's important to note that not all files need to be filed with FINRA, but they will need to be filed with Foreside. Have we received a FINRA letter in the past for similar content? You may submit something to us and your principal may come back at you and say, you know, last year we received a similar comment for a different fund, could be your fund, and we are always willing to share redacted FINRA letters for other clients, so that you can see that we are speaking from experience and that we have filed it with FINRA, so that you can see that we have merit to the comments that we're providing to the document. Fund versus non-fund related is another important point that we'll ask. You know, if the material is non-fund related, to put it in a FINRA space may not make sense. It's important to note that FINRA Rule 2210 covers a lot of space. There's a lot of gray. So if the fund material, if it's not fund material, then it may not need to be reviewed and approved by Foreside. However, if you're using it to talk about the desirability of owning your fund, or the purpose of the material is to market the fund, then that's when Foreside would review, approve, and potentially file that material with FINRA. The next slide addresses, okay, so what needs to be submitted to Foreside for review? And that's a good question. You know, as an outsource, we want to make sure that we're working, again, with you as a team. So standard material that we do review is websites that are fund-related, fact sheets, white papers that are fund-driven or strategy-driven, presentations that are used in connection with selling the fund. And there's some more points here. You know, any material that's directly promoting the fund should run through Foreside review. Any material being used to discuss the desirability of owning a fund. So if you're going out to an institution and you're talking about your strategy and you're then drilling down into the actual fund information, that material would need to be approved by Foreside and potentially filed with FINRA. White papers used in direct connection with selling a fund. A lot of times now, you know, there's a full suite of products that are produced as marketing campaigns for funds. And it may be a presentation, a white paper that discusses the strategy of managing the fund, as well as a website. So those white papers would need to be reviewed and approved by Foreside. Index material that will be used in connection with selling a fund. This is very common in the ETF space with all the passively managed and actively managed ETFs out in the space. There are passively managed mutual funds as well. If you took an S&P 500 fact sheet from their website and were utilizing it to talk about the desirability of owning your fund, that material would need to be reviewed and approved by Foreside and filed with FINRA. In return, that material would need to comply with FINRA guidelines because you're bringing it into the fund space. So the S&P doesn't have to comply with FINRA guidelines, but because you're utilizing it to market your fund, that's where the review process needs to happen and comply with FINRA guidelines. Fund websites and website additions. This is important because everyone wants to have a website presence with their fund. And as you build out the materials and collateral that go on those websites, each of those needs to be reviewed and approved prior to posting to the website. We may not need to file them each time with FINRA, but we do need to ensure that the material that's going on a fund website complies with FINRA guidelines. Email templates to be used to market the funds. These are very common in the industry, and firms use them all the time through constant contact. You're sending an email to a large set of institutions based off a list that you've either purchased or that you have based off your Salesforce or your CRM. And that email, because it's going to more than 25 people or institutions, would need to be reviewed and approved as marketing material for the fund. And important here too, also existing updates to existing fund material is another thing that we review on a quarterly or monthly basis, depending on how often you update those materials. It's important for us as the distributor of the fund to show to FINRA and the other regulators that we are reviewing updates to those materials, and we're ensuring that the advisors that we're reviewing the material for are updating them on a periodic basis in compliance with the rules. New fund marketing material. You know, you're in a grind and you have all these, you have 6 funds in your sort of toolbox and you're launching a new fund. It's important to remember that those new fund materials need to also come through Foreside and be filed with FINRA. And annual and semi-annual reports. Annual reports, you're required to have a shareholder letter and management discussion of performance. FINRA considers those pieces of the annual report marketing material. So we need to review and approve those prior to that report being published. Semi-annual reports as applicable. Not everyone produces a letter for those materials, but in the event that you do, please ensure that you submit it for review. So what doesn't Foreside have to review? One-off due diligence requests. This is important because an advisor, you should be able to talk about what you do as a firm, what products and services that you offer outside of the registered mutual fund. You could have SMAs, you could have an in-depth research arm. So those are all important parts of what you do as an advisor, and those materials, if not fund related, shouldn't have to run through marketing material review. One-off responses to questions received from clients or potential clients. This happens all the time. An investor wants to invest in your fund and they have a quick question about the strategy and they shoot you an email or they give you a call. You should be able to proactively answer those questions as they come in and not be subject to FINRA regulations. White papers discussing general topics. If you're going to utilize a white paper that talks about educating people on the large cap space, and that's sort of where you as an advisor have your specialty, that's fine. However, if it drills down into a sale for the fund, it may fall in the marketing material bucket, so that's a discussion that you may want to open up with your advertising principal. Other product material. We recognize that you do and potentially may market many other products. You may have other mutual funds with other distributors, and it's okay, but we don't have to subject that material to our review. We can rely on the other distributors' review, so that would not need to be submitted to Foreside. And registered rep correspondence. Those are subject to other guidelines. They do need to be fair and balanced, but they do not need to be reviewed and approved prior to use by the Foreside marketing review team. So how does it all fit into the advertising rules? The next slide, I'm going to go through the FINRA 2210 advertising rules. I'm not going to go through them number by number. I think the important takeaway here is that these are the general content standards that the advertising review team sort of reviews the material by. I think you'll see here that it's similar to the SEC anti-fraud principles. everything needs to be fair and balanced. Make sure any statements that you're making can be backed up. Things shouldn't be false, misleading. You shouldn't say things that, necessarily aren't true about your fund. Footnotes or legends. This is really important because FINRA feels that if you put material content in a footnote that is important to the main topic of the conversation that you're having in your material, it may cause the piece to be misleading. So if it's imperative to an investor understanding what you're showing in the material, it should be in the main text of the document and not relegated to a footnote or a legend that's on a different page. Context, balance, and clarity. I think this is a really key thing, and we see this a lot. If you have a 50-page presentation and you're talking about your fund and you're talking about all the good things about the fund, FINRA is really going to look for those statements to be balanced with corresponding statements about risk. Past performance is not an indicator of future results. The principal risks of the fund, all that information FINRA will look for to balance and provide context to the presentation that you're showing. They also may ask for more explanation for a graph or a chart. A lot of times firms will use charts to exhibit, how their fund stacks up against the index, things like that. And sometimes those charts need more clarity if you're pulling them off a Bloomberg system. A lot of times we have issues with actually using Bloomberg charts, so we need to be careful that that we're providing clarity around what is being shown. Here again, you'll see audience considerations. It's important to know if it's a retail or institutional audience. FINRA will really look into a retail piece to ensure that it is balanced and that we're providing the appropriate definitions and risk to the investing public. Projections are prohibited, and really you can't make projections of performance or anything else, and FINRA really, you receive a do not use letter if you project performance. So an advertising principal would ask, how did you get to these numbers, and sort of talk through that with you when you submit materials that may contemplate projections. Prerequisite for certain testimonials. I think this is an important point because SEC rules they outright really prohibit testimonials. The FINRA rules allow them to certain parameters, and this rule, piece of the 2210 rule, really clarifies what instances you could actually make it potentially use a testimonial. The next slide talks about the more sort of practical applications of things that we would ask you to add. Member firm name. You may be familiar with this because a lot of times when you're launching a fund, and this isn't necessarily common knowledge until you get into the space, but we will always ask you to add IMST LLC as the distributor because FINRA will look for that. They want to know who the member firm is that is the underwriter and in charge for distribution of the product. Tax considerations. It's important if you're having a discussion about taxes to really be in line with what the FINRA rule and guideline is as it relates to what types of disclosure and the additional types of performance information that may be required in the material. Fees, expenses, and standardized performance disclosures. All have a prominence requirement by FINRA, and it's defined really in here based off SEC Rule 482, which requires the material to have the 1, the 5, the 10, if applicable, since inception. Also, there's prominent requirements on the legend, which includes the information of where you can find the most recent month-end performance. Generally, it also includes statements that its past performance is not an indicator of future results, and all that information has to be the same font size, different text style than that of the performance data. So that's a very black and white rule that FINRA, if you miss it, FINRA's going to comment on it. Testimonial disclosure. In line with the prerequisite of rules needing to meet a rule or the FINRA rule for testimonials, there's also required disclosure. That disclosure includes, at a minimum, if the individual was compensated, and there's other types of disclosure that needs to be included if this is something that you're looking to put in your material. And then recommendations. The last part of FINRA Rule 2210 talks about how, when making recommendations, how to disclose it, and to be careful, in this space, because the FCC is very specific as it relates to recommendations and how they can be made. The next slide talks about fund-to-fund comparisons, and we wanted to talk about this because I think this is something that comes up quite a bit when we're reviewing marketing material, whether it's in a retail or institutional space. Fund-to-fund comparisons, while they're not prohibited by the SEC and FINRA, they're not the easiest thing to pass through FINRA regulations to get a clean letter. It's a little bit easier in the institutional space because the assumption is made there that that audience would understand that there are inherent differences between every product, but really in the retail space, that sort of allowance is not given to that audience. We have been able to get comfortable with and get FINRA comfortable with institutional requests for independent research as it relates to running reports out of Lipper, Zephyr, or Morningstar. A lot of times the advisors ask us to create a standardized disclosure page that would include standardized disclosure as well as standardized performance numbers to sort of sit on top of those reports, so that material is brought into compliance by default of the disclosure page. But we have seen, and this is very common in the financial professional and institutional space, that an institution will call you up and say, hey, can I have a Zephyr report on your fund, XYZ fund, and ABC fund, and see how they stack up. We've worked with FINRA quite a bit on fund-to-fund comparisons, and it's really hard to get a clean review letter if you're only using performance as a basis of comparison. FINRA doesn't believe that that's really a fair comparison. So we need to ensure that there's a larger basis and reasons for your comparison. In order to pass a retail communication with a fund-to-fund comparison, what really needs to happen is we need to disclose all the material differences between the funds. What does that mean? We need to make sure that the investment objectives, the costs, the expenses, any liquidity differences, different safety mechanisms, fluctuation of principal or return, any tax features are disclosed in the material so that the investor can make an educated decision on between the funds. We have received quite a few advisors come to us and say, we got this in the mail, or we got an email, and this institution is comparing us to their fund, and they're making disparaging remarks about our fund, and it's not correct and it's not accurate. So you really need to be careful when you are putting a fund-to-fund comparison out in the marketplace that you're considering all angles, because you don't want to be necessarily that advisor where you get the phone call that they don't feel like you're representing their firm appropriately. If you do submit a fund-to-fund comparison, your advertising principal would work with you, because it takes more time to review a piece like this, because what we need to do on our end is pull all the competitive fund prospectuses and ensure that the strategies stack up, the fee tables and things like that, and there isn't any nuances that sort of take it outside of an apples-to-apples comparison. And we've also seen firms come to us and say, hey, I have this fund-to-fund comparison. It's for institutional, but the wirehouse or whoever wants to use it wants a clean letter. So we have also filed fund-to-fund comparisons in the institutional space. And we have voluntarily filed these materials, and we have still received similar comments that we've received in the retail space. So it's a really sensitive area, and it's not a no, and advertising principals are trained to work with you on this type of presentation, but it does take time to get it there. So what does this mean? So how can we get it there? Ensure that it's an apples-to-apples comparison. Foreside or FINRA would probably take exception to the fact if you were comparing funds that had different objectives and different strategies. A lot of times if you're using Lipper and Morningstar categories, if you're crossing categories, FINRA has a hard time sort of making the correlation that it's okay to compare a bond fund to a large cap value fund. So, I mean, we need to be able to explain why you would be comparing your fund to something that wasn't in the same category. Another space where we've seen issues come up is comparing ETFs to non-ETF products. Now, we do understand sometimes those types of comparisons may make sense, but FINRA, again, has a hard time understanding because the ETFs are exchange traded, and if you're comparing it to a mutual fund, those are traded very differently or are not traded on an exchange. Actively managed fund versus passively managed fund. In FINRA's eyes, these are very different. One tracks an index, one's managed by a portfolio manager. So we need to ensure that we are making explanations as to why we would compare the two. And another point is dissimilar share classes. We have seen firms try to compare I shares to A shares, and in order to do that, you need to explain why you would compare an institutional class to an A share class. The next slide talks about pitfalls, and I think this is an important slide because there are a lot of areas to trip up in marketing communication. You know, as a team, we've been doing this for a long time, and there's a lot of gray area, and that's why we try to work with all the advisors to ensure that we're not coming from a place of no, that we're working with you to be able to get your message out there as close to the initial submission as possible. So hot topics and pitfalls. Pre-effective marketing. You know, prior to filing the registration statement, generally you shouldn't be talking about the fund. But then in the red herring period, it's okay as long as it goes through the first round of SEC comments, because then, you know, it may be at the stage where it's almost okay to talk about, but you need to ensure that you're appropriately disclosing that it's in the pre-effective period. And many of these marketing materials stay right in line with what the prospectus states, because if you move away from it, you know, you don't want to get in a situation where you could potentially be gun jumping under the SEC rules. Now, it's not a FINRA rule, so we will work with the advisor as well as the fund counsel to ensure, you know, that we're in the right space. But it is important because we do get a lot of questions about pre-effective marketing. Social media. We do a lot of work with social media. A lot of the ETF firms we work with are active in this space. We do have quite a few advertising principals that are really familiar with, you know, how to stay in a good space with this. So, you know, what does this look like? LinkedIn, Twitter, Facebook. A lot of firms, when they're looking to launch funds, you know, want to launch a campaign on Twitter or LinkedIn. We need to make sure that we're doing it within the appropriate guidelines. Anything that's being posted to a social media site is considered general public marketing material because anyone can have access to it. So we need to ensure that all that material is being reviewed and approved prior to use. Also, if it's going on an advisor LinkedIn page or marketing or Twitter page, we may not need to review the whole advisor page, but we do need to review and approve and potentially file with FINRA all the fund-related material. We need to also ensure that the appropriate disclosures are available. So there's a lot of important considerations to think about when you're looking to launch in the social or in the sort of the social media space. I think at the FINRA conference they talk a lot about social. Also, another consideration is if you're a registered person, all those communications are considered correspondence, so it needs to be captured by your email provider or your email service capturing provider. So if you are looking to get into the social media space, we are more than willing to have that discussion with you and sort of walk you through all the pitfalls and potential issues that come up on a daily basis. Another pitfall is, and I mentioned this earlier, placement of important disclosure to a footnote. We've had a couple firms who had glossy brochures and they looked really great, and they put, you know, really pertinent disclosure or pertinent information to the presentation in a footnote, and we had to make adjustments to make sure that it was in the main text. Referencing the desirability of owning a fund or a product and not balancing it with the appropriate risk disclosure. You know, it's, again, I said balance. It's all about balance. You may have a banner ad that just mentions the ticker symbol, so that may only need the distributor or the member firm name, and then you're clicking to your website that contains the rest of the disclosure. However, if you then put a tagline for the fund as well as some other information, FINRA would require that potentially to have prospectus language as well as a statement of risk. So there really is parameters as to the more you talk about the desirability of owning the fund, the more information that's required by FINRA to put on the material to disclose pertinent risks. Use of an index different than what has been identified as the benchmark. We see this a lot. You know, there may be a fund that tracks the S&P 500, and they're looking to compare it to another index like the Russell 1000 or MSCI. It can be done. You just have to ensure that, one, you're utilizing the benchmark as well, and we're also explaining why we would bring another index into the material. So you may have a very good point as to, you know, how the fund is stacking up against another index, but we need to make sure that we're clearly presenting that. Never predict performance, and never imply that performance will repeat itself. Those are all disclosures, or the past performance disclosure is in most presentations, and any statements of yield, anything that involves performance, we're going to ask you to add that to the information, because FINRA really, again, it's a balance thing. Enforcement actions. So there's not, marketing material is a low-hanging fruit, and every time someone has a FINRA audit or a SEC audit, they always ask and collect the marketing material. There's a few enforcement actions here that we like to highlight. One, a firm was fined for the use of misleading back-tested index performance. This is something that used to be allowed in the ETF space as well as in other spaces. And then I think in 2009, FINRA explicitly prohibited it for use in any material. And since then, they released the ALPS letter, and it's been allowed in a very limited space. But to utilize that material in a misleading way, FINRA took exception to it and fined that firm. Another example is a firm was barred from the industry for utilizing misleading hypothetical back-tested data in model performance. A little bit different because it's not an index, it's actually a model. So they were barred from the industry because they represented that this back-tested performance was in fact the model performance, and that's very misleading. Finally, I think this one really applies across the board, because this, you know, with the way the economy fluctuates, changing economic causes misstatements in sales material, and this firm was fined and censured, and it was fined $100,000. I think it's important because if the market moves away from the strategy and you have materials that talk about how great the large cap space is, and then, you know, the market fluctuates and you're still utilizing that material about how great the large cap market is, it may not still be relevant and accurate. So it's important to ensure that you're doing a sort of fulsome review of all your marketing materials to ensure that it may not have been misleading when we filed it at FINRA, but 4 years later, when we're still using it and hasn't been resubmitted, that the market may have moved on us and caused the material to be misleading. The next slide I wanted to cover is really exciting for Foreside. It's our new advertising compliance system. We wanted to give you an overview here because we're really excited about rolling out this new technology. All of you are used to using an internet-based tool that we currently are running. This is a a big update to the current technology that we're running. It is still internet-based, but it's more of a workflow and record-keeping system that allows us to review materials for FINRA and SEC compliance. It allows us to collaborate and evidence appropriate approvals in the system. It's 17A4 compliant, similar to our current system. And also it's going to make us all more efficient because it allows us to review the marketing material within the system. It has a customized workflow, built-in annotation capabilities, which is nice because currently when you're working with your ad principal, a lot of times they'll mark a document up in PDF, upload it into the system, and this sort of takes away that extra step. The annotations are made directly in the system. And also most exciting is the automated batch filing, which sort of will be behind the scenes to you, but it will also make us more efficient on the ad principal side because we're not manually filing those materials to FINRA's AREF system. So why did we create this system? I think it was important for us as subject matter experts to have the best technology in order to make us more efficient. We really needed a new system that was efficient, effective, practical, simple. So we built it, and we're really excited to roll it out. Currently, we have 43 clients on the system, and we're looking to roll out the system to all of you in the first quarter of 2018. What does the rollout mean to you? Well, it's a good question. Your advertising principal and your relationship manager will reach out with dates that we will have scheduled to ensure that everyone has a planned roll date onto the new system. Manuals will be distributed. Your advertising principal will work with you and your team to ensure that you're appropriately trained on the system. The manuals will also be available on your homepage or your dashboard within the system. And training videos will also be included in there. We want to do a series of 4 or 5 training videos, 2 minutes each, that allow you to see the functionality so you can get up to speed on how to use the system. I will say it's not, look and feel is different than the current system, but it does the same thing, and it has more bells and whistles. Here, we sort of discuss some of those bells and whistles: configurable messaging, which is really important, reporting, and also has export abilities for you to export information. If you are having an SEC or FINRA audit on your advisor, you'll be able to pull that data out yourself rather than asking Foreside for that material, which I think is important. Personalized dashboards, which we all sort of personalize our work differently, and this system will allow you to do that. And then also you can track where the material is in the system. So we're really excited to roll this out, and as we roll out that deployment plan, we will be reaching out to each advisor to work with their schedules to ensure that it fits in with your new year plans. And now we have questions and answers.
Wonderful. Thank you, Meredith and Ashley, for providing such great information for us. So we are going to address some of the questions that came in. The first question we have is, how would you describe the relationship between IMST Distributors LLC and Foreside? Ashley, I think you can take this one.
Sure, yeah, and great question. We get this one a lot. So IMST Distributors LLC is Foreside's white label SEC registered broker-dealer that was launched by Foreside for those clients obtaining services within the Investment Managers Series Trust. Foreside, as Meredith mentioned earlier in the presentation, currently has 18 SEC registered broker-dealers, of which 9 are white-labeled specifically for those clients who want the name of the broker-dealer label to have a direct correlation to their firm or funds. Specific to IMST distributors, this is helpful from a branding perspective, and it also keeps things clean as it relates to having the same naming convention to that of the two trusts.
Great, thank you, Ashley. We have time for just one more question, and this question is, how long does a standard review process of marketing material take if I want to post to my website as soon as possible? Meredith, do you have that one?
Yep, that's a great question. We get that question on a daily basis, and we recognize that you as advisors, you want to get your messages out to the public as well as to your institutions as soon as possible. Stated standard turnaround time is 3 business days. However, because of the way Foreside sets up the advertising relationship, we assign a primary reviewer to review your materials and a backup. That way you develop a relationship with the primary reviewer, and this helps to bring down turnaround times once you're onboarded, and we rarely see material go to the stated 3 business day turnaround time. In addition, if it were to, your advertising compliance principal would ensure that they're in direct communication with you as to why it's a delay, why we're taking extra time, because there are materials like a fulsome website where it has a lot of bells and whistles and a lot of linking that may take longer than a fact sheet or a tweet. And generally, tweets do not take more than 1 business day. You know, we do recognize that the social media space is sort of special in that it's immediate response. So we try to turn those around in 1 business day.
Great, thank you so much, Meredith. So that is all the time that we have for questions today. If we didn't get to your question during this webinar, we will contact you separately with a response. The PowerPoint slides and a recording of the full presentation, as well as a summary of this Q&A session, will be emailed to all the participants probably about the beginning of next week. So I'll turn this back over to Heather to conclude our webinar. Heather?
Thanks, Amy. Those were some great questions. I would like to thank our panelists from Foreside and all of the advisors and sub-advisors for joining us today. We know that everyone is very busy and we appreciate your time. We hope that we have provided you with a better understanding of the marketing material review process. If you have any additional questions, please contact any of the panelists or me. Also, you'll be asked to complete a short survey on today's webinar to help us on conducting future webinars. Thank you again for your time today, and we look forward to the next webinar.